Alright, let's dive in. It's another Sunday morning. It's, a little bit more than 11 a.m. and we are looking at Bitcoin once again. Seems like things really played out the way at least I was anticipating. And I do remember last week I kind of stressed on the point of, you know, formulating a plan, formulating a scenario, and then look for evidences that it's actually playing out. And of course, having points of invalidation for what is your current bias on the market. I do remember that I was pretty clear on this price segment over here, and to me it was a good area for a trap, for a bull trap, and essentially it's what we had. The market basically came back up. It just retested this point of release on the daily time frame, retesting this block as well, right in this area. So that should define your premium relatively to the general order flow of the market, which is coming down, right? So I do remember I put out some sort of that was a screenshot I had. Let's see, it was this one right here, and that's basically the logic of this price action. Look, it was at the end of January. I was kind of talking with a person, a guy in a channel, and I was like, we were back here, I remember. Now, the problem that I was seeing is basically that was a perfect point, a perfect spot for a bull trap, if you think, at least in a short term, right? Because there was the swing high on the daily that you can see right in here, and that was an inefficient segment of price delivery in here, which is much more visible on the weekly time frame. And it would be a good liquidity pool to engineer the liquidity needed in order to drive the market the other direction, right? And I think the problem was that a lot of people were looking at the daily, and of course if you look at the daily you can see that you have your low, your higher low, and your high. So it's kind of misleading somehow, because you could be brought to think that we have a trend reversal. Yeah, essentially you might think so, but if you zoom out on the weekly time frame, as I was saying, the weekly was telling a different story, because these price action in here, it creates the illusion we reclaimed a daily swing high. While the macro, so for me the macro is normally the weekly time frame, the macro was still kind of bearish, at least mid-term, short term. And I was pointing out that basically when I say the one in the circle, it's not really a swing high by definition on the weekly. So this kind of a view could actually fit the price action that actually unfolded from that, from that moment. Now, the point is that for me, look, let's zoom out on the weekly time frame. On the weekly time frame, that's what you see. Essentially, it's still the same chart we were looking at last week. Just last week we were in here. Now we had development in price action, and we had a move to the downside, filling up this gap that was created on the run up, and basically played out exactly how the logic was suggesting. And I think somehow you need to be prepared to you need to have that ability to blend in together different time frames, and always remember that higher time frames usually take precedence. It's always better to play the market in the direction of the higher time frames if you want to play directional moves, if you want to trade with the favor of the higher time frame order flow, because at the end of the day what you're going to see in the majority of times is that kind of a order flow market structure is the one which gonna have much more impact on price action development into the future. It is a little bit complicated, I realize that, because it's a weekly time frame at the end of the day. So things that you're observing right now, it might take a few days, if not weeks, to play out. And if you do remember, I mean, that logic was formulated 29th of January 2022, and it took at least 2 weeks to, well, even more, because today is February the 20th, so more than 2 weeks, almost 3 weeks to play out. So again, you need to be patient, you need to always relate to the time frame on which you are formulating your hypothesis, because that's basically the time frame that will dictate the pace of them to be either validated or negated, you know. And I mean, if we want to zoom in, this week of price action, it was kind of interesting, you know. We had, and let's see if I can bring on the daily separator, so much it would be much better, I think. Seems like I cannot. Oh yeah, I set them up to be visible only on the hourly and below it. Well, okay. So look, we had the swing failure right in here, retesting this block and this point of release, okay, on the daily time frame, and zooming in, okay, at this point, we can see that basically we had returned to this base, if you want, to the shelf, and the shelf actually provided a little bit of support. And you know, when we had this price action in here, that was a very particular moment, because I had another chart for this actually, but if you do remember, during that time it was here essentially. If you can still relate to the price action, it's still the same segment, we are still in here, it's just a different chart. I charted a little bit differently because I wanted to highlight something in here. It was on Wednesday, I think it was Wednesday, right? Yeah, this one. And I got this vertical line in here because there was a particular event going on Wednesday. It was the FOMC meeting, and I never really played these sort of moves in markets, especially in Bitcoin, because up until a point I was thinking like, yeah, I mean, FOMC meetings, you know, FOMC, sorry, NFPs, you know, those kind of events, they are usually a good play if you know how to position yourself in a foreign exchange market. But I was not so sure about how do they impact Bitcoin price action or cryptos price action in general. But this example right here was pretty good. Let's try to zoom in as far as we can. Let's see high. Okay, there we go. I highlighted this moment right in here because basically that's 1 hour before the event, right? Because the event was at 8 p.m. my time, and just an hour before that, you see the market really start to accelerate to the upside, and you know you need to start asking yourself what it is seeking. Well, of course, it's seeking liquidity. And during those periods where you are seeing the market kind of waiting for news, you know, because you never know how the Fed is going to come out and saying this or that. So the market is always a little bit, you know, on its feet. And what happens is that in those periods, liquidity goes dry because everyone is kind of pulling their orders. You know, they are waiting on the sideline to not be, you know, they don't want to be caught in a impulsive moves or in a spike in volatility, and that basically what generate an even more evident lack of liquidity into the market. So it's even easier to move price around. So it was nice to see that during that moment we saw essentially Bitcoin coming up and performing another nice play here, another swing failure on an hourly time frame, so intraday this time around. And I was like, you know, I was looking at it. I wasn't absolutely, you know, planning to play it whatsoever, especially because I was having dinner back then. But I do remember I kind of walked next to the monitor after dinner, and I looked at this price action, and I immediately thought, you know what? This is looking like a good play if you want a short. And I immediately sent out something like this. We were in here, essentially, and I was like, look at that. If the hourly confirms a sweep of those highs and starts distributing, this might be in a short. Otherwise, it's moon time. Well, of course, I got a question. Well, what do you mean? Well, how can you say it is moon time? Well, of course, relative to the lower time frame. So you know, I moved to the upside above the weekly highs, previous weekly highs, let's say in the realm of the 46k, 48k, something like that. Of course, we didn't have that. What we had instead was basically this pattern of distribution happening right after the swing failure on the hourly time frame. So the liquidity was engineered about these levels, you know, exploiting the news event coming in, and then we started to distribute. And I was looking at essentially these level below market price because well, of course you cannot read the notes, but essentially I was thinking, everyone who's long after the news is going to place their stops below this low, and you still have this inefficient leg to be filled, and this pocket of liquidity never retested. So I was anticipating a return to that point. Funnily enough, the market actually gave me what I was expecting in a very dramatic fashion, because that level right in here, highlighted in red, it was more than nuked, as you can see. Clean break, impulsive move, spike in volatility, completely crashed. And eventually the market, kept on pushing down, and we got back to the daily relevant level we were discussing the other last week, essentially, which is the one we are sitting on right now, this one. So what should you expect now? Well, it's hard to tell. I mean, it's hard to tell, especially because it's a weekend. Usually what I observed is that weekly plays, weekly moves are not always on the same side of what would be the order flow for the actually regular trading week. So in a period of a downturn like this, you would expect weekend to have a counter move. Let's say in this case an up move. Well, didn't have it, so need to be careful in these moments because you never know. I think this area, it's of a particular importance because that's where you want to see Bitcoin hold. If you want to retain a bullish bias that you might have developed in this segment, if you want to retain that bullish bias for the days and weeks to come, you need to see Bitcoin holding up in here. Because I was pointing out, it's not bad to retest this level, right? We're just picking up more liquidity. Maybe the liquidity we picked up here or here, it wasn't enough to, break out from the structure, and especially this one right in here. So maybe we need to come back down, like fuel the tank and try again higher, right? And maybe this time around would be the good time, would be the right time. But what you don't really want to see, or at least what I don't really want to see, is this basically cracking this area and then starting to kind of drift down. Because at that point I would expect another reaction here, some sort of a short-term bounce, but eventually I would see price getting back down. That's the only concerning thing I'm looking at right now. So I think you could try to perform a lower time frame play at this level. There are good places to, good spots to enter the market and manage your risk accordingly. You could use this point of release on the 4-hour. The H4 time frame provides you that right now, and you could target, this clean breaking point in here, or filling in this inefficient move. But I wouldn't count on it too much, because if you look at it, the market price is being delivered to the upside and then to the downside. So this range right here, it's already balanced. So for a short-term play, it might be kind of reasonable to enter the market here, maybe place a stop. Well, below these lows is kind of obvious. Don't know if I would place it like that. Should judge on a lower time frame probably. Let's see if we got something there. Yeah, well, that could be cool. I mean, if you want to really try to scalp it, enter the market here, place a stop below here, and let the chips fall what they may, I assume, right? But again, this weekend I'm not well. I don't really want to engage the market. I need to do other stuff. I need to relax. I need to do my things. Be back in the market Monday, Tuesday, I guess. So, well, essentially that what happened this week. All right, and I'm sure a lot of people were actually looking at this gap that we had, and I mean it's always like how do you play a gap, right? Because as soon as you see a gap, you think that the market needs to trade back into it as soon as it can. Well, as soon as it can. Well, sometimes it does, sometimes it doesn't. Look at this. I mean, that was a gap which was formed. It was July 21, has been retested and closed in on January 22. So I mean, you can see that just because you see a gap, it doesn't mean that price really needs to get back into it, you know, this very moment or next day and next week. But you should see it as a draw on liquidity if price starts to reapproach those areas, right? Because essentially a gap is it's just a segment of the price action that's not been traded. There wasn't any transactions in this segment right here. So the phenomena usually is that the market actually seeks for certainties. It's like everyone wanna check if they are on the same page. So we didn't know what happened right in here. Nobody actually had a chance to either buy or sell, in this segment of price right here. So when we reapproach that, it's like the market is telling, you know what, let's go down there and see, who stands where. I mean, what can we find here? If we are going to find buyers, well, okay, we're going to bounce. If you're going to find sellers, well, okay, we are going to close in the gap and failing the bounce, like you got right in here. We came back and there was no reaction at all. And it's kind of cool. There is some nice things you can look at while you see price approaching a gap. I tried to highlight. Don't move this one, please. Okay. I tried to highlight what happened when we filled the first gap you were seeing on the higher time frame, the lower one, the one which wasn't revisited for months. And basically these lines right here, they are very light. I don't know if you will be able to see it, but again, let's do it this way so you can see it. Look what happens when price gets back into the gap. You have the usual pattern that I really love to trade, which is essentially a low is formed, a low is swept, and you got the impulsive shift in market structure. You revisit the point which originated the shift, the impulse, and up we go. I mean, after that, you can see that price really moves aggressively away from it. It's even much more pressure. Yeah, you can appreciate that in the early time frame. So price really doesn't spend a lot of time in this gap, while instead these are the iteration of it. Well, 1 minute, it's a little bit extreme. Let's use a 5 minute. You still have your gap in here, and you see that basically the reaction is completely different. You don't really have that pattern. You don't have that kind of a QM, if you want, right? Because it looks like a Quasimodo, but you don't have that in here. Essentially, the reaction is pretty lackluster, and as you see price even this time though, right? If you think about that, it doesn't really spend a lot of time in there. It just decides that it wants to go lower, and soon it does, right? Okay, that was enough for the gap play. Now, so what to expect coming into next week? Well, of course, we need to wait for the CME to open up again. It's gonna be probably later down the road. I don't even remember now. On the top of my head, I don't even remember what time it's gonna be. At least my time. But it will be later in the day. So let's see what happens when next week starts. And yeah. As for now, I'm still again retaining my short-term, mid-term bearish bias, and I think the only thing for now that could really makes me shift my bias would be, as I was saying, a bounce in here, breaking out of these swing, essentially. After that, if we can close a daily candle or something like, resembling it above, let's say 40, 46, 48, at that point I would be kind of bullish. I will switch my bias in the markets. not only this market, but markets in general, because I was thinking about having a look at the S&P. This is the S&P on the daily time frame, and what we've seen in the last months, I guess, because yeah, it was the beginning of January. January started out, and you had a high formed, a high swept, market structure broken, returning to premium or OTE, whatever you want to call it, and positive move down. Where to? Well, where can you find liquidity for that? Right below these lows and these lows, and of course in this pocket of price action that was never really retested up until this point. Can see, I mean, sometimes you can use the fib extensions if you want to kind of see if they lines up with an horizontal line you could have on your chart. This time around, pretty much, I mean, basically price spiked down in between the 1.7.27 and the 1.62 extensions, so that was pretty good. The same exact phenomena can be observed on the weekly time frame, I guess. Yeah, you basically had a high rated break in structure. When you break this wing right here, clean break, smashed, returning to premium. If you measure, if you throw the fib on it from the high to the low, the swing that broke market structure, returning to premium, filling in the weekly gap, weekly inefficiency, weekly fair value gap, whatever, and rejection down. Now, here's where things kind of, deviate from pure technical analysis, or at least the way I do it, okay? Because this is not what I'm about to say. It's not really the TA I based my trading on, okay? It's some sort of a general outlook, and it's really difficult to be precise, and it's really difficult to be accurate for me, because these stuff are gonna probably take weeks to play out, unless something really bad happens, some sort of a black swan event, I don't know. The overall landscape out there, it's pretty messed up right now. Let's just look at Canada, let's just look at what's going on in Ukraine, and let's just look at what's going on in the broad markets in general. The Fed, inflation, rate hikes and whatnot. But what I was really looking at, it was right this morning, and I'm gonna show it to you because I think it's pretty cool to see. Well, cool, depends, but at least it's fascinating if you want. Okay, I was basically watching a video on YouTube, one of my favorite YouTubers, Steve Meter, and it was pointing out a tweet. It was talking about a tweet that is, of course, on Twitter, right? What a dumb I am. And it was essentially on, don't remember the name of the account now, at Fading Rallies should be the name of the account, something like that. And I downloaded the pic that was posted there. Basically, it was this one. Now you might say, what the fuck is that? Okay, basically this is a liquidity index, and what these guys were pointing out is that we might see another liquidity event of the same magnitude we saw in 2020, because you can see that when liquidity really dries out, usually the market doesn't really react in a very positive way. You can see that in here, you can see that in here, liquidity, there is a lack of liquidity into the market, and of course the market dies down. And that was March 2020, again, low liquidity available, and the market dies down. Look where we are now, standing to this chart, of course. I'm just picking up something I've seen on the internet. It's not something I honestly did, verify, or, I didn't actually go there and check, especially because I don't have a clue to where I could pick up this data. But anyway, it's kind of funny and interesting to see. What was really interesting to me is just, the logic behind it. Right? The logic behind it's kind of, I think it's applicable, because if you consider the market like, a place where people get in to transact, essentially, I mean, the market is that place where buyers and sellers kind of meet each other, and, they basically express their opinion on whatever asset classes the market is about. And how do they do that? Well, they buy and sell, right? The point is for me that having a situation where liquidity is so low, well, that means essentially that if for some reason, it could be whatever, you just need a catalyst, I think. If for some reason you have, let's say, the Fed coming out and being even more hawkish than what it was before, or some sort of war actually breaking out in Ukraine, it just needs to be a catalyst, regardless what it is. Okay, I mean, we are so fucked up out there in the world that at this point it could be anything, right? Another variation of the COVID, whatever, or as you can see during the last year and a half, supply chain is falling apart, right? So it could be whatever catalyst, but the problem is that if you imagine a lot of people, investors, hedge funds, whatever, that are essentially trying to exit the market, in order to exit the market and to sell their positions, they need someone which is willing to buy, right? What happens if there is no liquidity into the market? Well, there won't be enough liquidity to absorb the eventual downturn, crash, whatever, down move. And so the problem is that there will be some sort of a phenomena, in which everyone will scramble for the door because everyone is trying to exit the market, but they are not finding the liquidity available to close down their positions. And that will create, a domino effect, bringing price really down at a, faster and faster pace if you think about that. Okay. Remember that it's not just a human decision, right? There is the problem of high frequency trading, algorithms are out there, and if you see those kind of events where those algorithms has their selling routine triggered, they are gonna sell because they actually don't know what's going on. They are just programmed that way, you know, and you can see where the chain of events could lead to a domino effect into the market, which is kind of ugly to forecast and to imagine, but I mean it is a possibility. So you need to take into consideration, especially if you're exposed in these markets. Another point would be, the outstanding margin debt, which is present in the market. These markets are actually highly leveraged. Essentially, what a lot of people have done, or still they are doing it, I don't know. But the phenomena is they are basically, they are actually holding stocks. So what do they do? Stocks are going up, right? So what do? They basically borrow funds against the stocks that they're already holding, and with those funds they go out there buying back more stocks. The problem is that when these outstanding amount of margin debt, of leverage, right, when the castle starts to crumble, it's gonna crumble and it's gonna fall in a very dramatic fashion. So that's another point which had to, the possibility. I'm not talking probabilities, right? I'm not saying, it's 70% possibility probability or 20% probability. I'm just saying the the factors at play are there, and it's just a matter of see and observe when you reach those inflection points, right? And that goes for whatever you're doing technical analysis or whatever you are trying to understand the fundamentals of the market. uh, there are dynamics at play that you cannot overlook, because that's usually what screw people over in this game. So yeah, I mean, again, uh, let's just close down the video getting back to Bitcoin, because I don't want to scare everyone which is holding an ETF in the stock market more than I have already probably done. Again, yeah, Bitcoin. Okay, as we were saying, yeah, it's not the bad thing habit to happen to come back in this area. Uh, the important thing is gonna be what happens next, right? And I think the problem would be, again, considering what I was telling before, if, as we saw last week, if these markets are pretty correlated to each other, so a liquidity event in a broad market should be a liquidity event which it's going to affect the price of Bitcoin too. So just be aware of that. And I think this is not the time to be over leveraged. This is not the time to play the cowboy, to play the hardcore game. Times like these, I think you should manage your risk properly and be focused on don't lose too much in the event of something really bad hitting the markets, right? There will always be time for gains. There will always be time for moonshot and whatever, plan B, whatever you want to think of. But maybe it's not this time. Or at least we are not there yet. Hopefully we get there, but gotta be realistic. And as the old saying goes, trade what you see, not what you think, right? With that, I think I'm gonna leave you off. Hope you're gonna find this video interesting again, or well, if not, well, too bad, I guess. I'm gonna enjoy doing it no matter what. So yeah, have a happy weekend, have a happy Sunday, try to relax, chill, and we will probably update these videos next week. Peace out.